Imagine waking up tomorrow and realizing that your mortgage payment changed, your credit card became more expensive, stocks moved sharply, and suddenly everyone online is talking about one thing: the Federal Reserve. But what exactly is the Federal Reserve? Why does everyone from billionaires to normal families care so much about one interest rate decision? And most importantly, how could this affect your money? Today, we're going to break everything down in simple language. By the end of this video, you'll understand what the Federal Reserve does, why interest rates matter, what's happening in 2026, and what could happen next. Let's begin. The Federal Reserve, also called the Fed, is basically America's central bank. Think of it as the control center of the entire US economy. Its job is simple: keep prices stable, support employment, and maintain financial stability. But there is one tool that gets the most attention: interest rates. Now, let's make this simple. Imagine borrowing money. Interest is the extra amount you pay for using someone else's money. Now, imagine that happening across the entire country. When the Fed changes interest rates, banks change their rates, loans change, credit cards change, businesses change decisions, and stock markets react. That's why a single announcement can move trillions of dollars. So why does the Fed raise interest rates? Imagine prices start rising too fast. Groceries become expensive. Rent increases. People spend more and more. This is called inflation. When inflation becomes too high, the Fed may raise interest rates. Higher rates make borrowing more expensive. People spend less. Businesses slow expansion. Demand cools down. And inflation may begin to slow. That sounds good. But there's a trade-off. If rates stay too high for too long, economic growth can slow down. Companies may hire less, people may spend less, and markets can become nervous. Now, let's talk about the opposite. Why would the Fed lower rates? Imagine people stop spending, businesses slow down, jobs become harder to find, economic growth weakens. In that situation, the Fed may lower interest rates. Lower rates usually mean cheaper borrowing, businesses may invest more, consumers may spend more, and markets often respond positively. But there's a risk. If rates stay too low for too long, inflation can come back again. That balancing act is why the Fed gets so much attention. And now in 2026, investors are focused on one big question: will the Fed keep rates high, or will it start lowering them? People are watching inflation numbers, job reports, consumer spending, market expectations, and every statement from policymakers. Because even one small signal can move markets. But this isn't just a Wall Street story. This affects normal people. If rates remain high, mortgages may stay expensive. Credit card payments may remain costly. Businesses may slow hiring, and major purchases become harder. But there can also be benefits. Savings accounts may offer better returns. Now imagine rates start falling. Loans may become easier. Companies may invest more. Consumers may spend more. Markets may react positively, but inflation risks may increase again. And that's why there is no perfect answer. Now let's talk about stocks. Stocks react because companies react. If borrowing becomes cheaper, many investors expect more growth. If borrowing stays expensive, investors may become cautious. Technology companies, banks, consumer companies. Everyone watches the Fed. That's why financial news never stops talking about interest rates. So what happens next? The truth is, nobody knows for sure. Markets move based on expectations. The Fed reacts to economic conditions, and conditions can change quickly. The smartest approach is not to panic. Understand the system, watch long-term trends, and avoid making emotional decisions based on headlines. Now you understand why one Federal Reserve decision can affect millions of people. Interest rates are not just numbers. They influence spending, borrowing, investing, and everyday life. If you enjoyed this video, subscribe for more finance content explained simply. And leave a comment below. Do you think interest rates should go higher or should they start coming down? See you in the next video.